to another episode of the Community Collective. I'm here with mortgage banker Brett Green from Guild Mortgage. So Brett, tell us a little bit about yourself and what you do.
Oh, well, thanks, Liz. So I work with Guild Mortgage here in Highlands Ranch. I have been in lending for about 18 years. My focus has always been making sure I give good information to customers, help them understand the mortgage process, and really figure out how a mortgage fits into their financial plans. So I try and take this and look at it as a big part of your financial objectives overall, and helping you attain those goals, and make sure you're selecting the right program that fits your and your family's needs.
Awesome. Yeah. And so, I mean, if anybody's keeping up with real estate or mortgages or interest rates or anything like that, there's obviously a lot of crazy stuff going on. So can you talk to us about what you've seen the pandemic have an effect on mortgages and all of that?
Absolutely. One of the most notable changes that's occurred over the last 30 days, we've been in what's called a liquidity crisis. So normally mortgages get bundled and sold, and you have large nations and wealth management companies buying what are called mortgage-backed securities. Once we went through kind of the chaos of the early stages of COVID, there were no buyers for those mortgage-backed securities. And as a result, the market started grinding to a standstill. There were also some other constraints going on in the market that impacted that. And ultimately, the Fed has made a decision to step in and be essentially the sole buyer of mortgage-backed securities currently. What that means for a lot of buyers is a lot of the large jumbo programs, outlier programs have disappeared over the course of a month. But for good buyers, your traditional Fannie Mae, Freddie Mac, FHA, and VA loans are still around, but a lot of rule changes have been implemented, and lenders are changing their rules for what they'll accept for loans.
Okay. So how are you adapting to the new rule changes, and how are you adapting to the virtual world and dealing with clients that way?
Well, for our business, one of the advantages of being at a company like Guild Mortgage, which I've been at this is going into my 10th year, the reason I selected this type of organization, we're a direct seller servicer. So we sell directly to Fannie Mae and Freddie Mac, as well as Ginnie Mae for FHA and VA loans. But we also retain the servicing rights. So when you make your payment to a mortgage, to whomever you're paying your mortgage to, most of the time, the person on the other end is called a servicer. They're not the end holder of your mortgage. They're just the one collecting your payments, processing the payments, and sending the interest coupon to whoever ultimately holds your note. But in doing so, we have the ability to hold on to the loans and not be worried about selling it to another party that may, at the current time, not have the cash or ability to buy. And that's just given us an advantage to move more quickly and be in a better financial footing for us as an organization.
That's awesome. Are you sticking to like phone meetings or Zoom meetings or what with new people who need mortgages or refinancing?
We're doing a lot of happy hours at bars. We're going to concerts together. It's great. Ball games. It's fun. A lot of the conversations for us have already been phone conversations. I'd say 90% of the time in my business previously, I may never meet a client until the closing date, or in a refinance situation, may not meet them at all unless we've done business in the past. As a result of the pandemic, we've gotten more and more comfortable with utilizing tools like Zoom and Blue Jeans to meet face-to-face, which I really enjoy. And I think long-term, it's going to have a lasting impact on how we conduct business in the future. So driving across town can take 2 hours to get somewhere and come back. And if we can do a Zoom meeting at 4:30 and not drive 2 hours, it's really helpful, and we still accomplish the same things face-to-face. So.
Yeah, I totally get that. So it hasn't really changed too much on that end, but I want to go back a little bit. And you mentioned that Guild can do some things that a lot of other lenders can't. What else are you doing what else can you provide that the competition really cannot?
From a program standpoint, One area that really suffered more recently was for first-time home buyers and their access to a lot of down payment assistance and grant programs. There are a lot of mechanisms behind the scenes as to why that is, and lenders made the decision to not move forward with a lot of those programs. Guild did, it's been a big part of our business for a long time, 20% of our business as an organization. And keep in mind, Guild is a very large lending institution. So 20% of our business across all of our states has been bond programs and first-time homebuyer programs. Guild's been in business 60 years. It's a cornerstone of what we do, helping first-time home buyers and really helping people achieve their home ownership dreams. So for us, making sure that we were able to get those programs back in line and be comfortable with it was super important. So that's a big piece of what we're doing. Additionally, we haven't instituted a lot of overlays on credit scores. So for an FHA buyer, we can still do a 600 credit score, same for a veteran. And we haven't made any significant changes to conventional loans. And there are lenders out there who've just said, you know, if your score is below X, we're not doing loans at all. So we've been able to keep a more robust offering for our customers where others have been much more restricted in how they're lending.
That's awesome. So for somebody who's thinking about buying a house or refinancing, what's the first step on your end? What would you recommend they do?
You know, the first step is always, I enjoy having an initial phone call just to find out what the goals are. The logical steps in getting pre-approved are having a conversation, getting a really good understanding of what you're trying to accomplish and how that fits into your financial picture. And then doing a loan application, which ultimately gives us a snapshot of a 2-year work history and then what assets you have available. It also allows us to pull credit, which is extremely crucial in the process. So that allows us to do one of two things. One, figure out what needs to be done to improve credit to be able to purchase, or to figure out how to move forward and which programs are going to work in the best way possible for you.
Awesome. And how do people get in contact with you?
For me, I'm a cell phone, so cell phone, email, text work very well. It's a constant battle to keep up. It's extremely busy now. Rates have fallen significantly, and so for a lot of homeowners in this time where income's been disrupted with COVID, looking for ways to either save money or buy a house, we're just getting an influx of calls because rates are extremely low. So there are a lot of opportunities, both for buyers who may have been priced out of the market a year ago. Now 1 to 1.25% lower in interest rates is significant in being able to qualify for more house. And 2, for borrowers that just are looking to lower their monthly payments. So
awesome. So to wrap things up, before we wrap things up, what are your predictions moving forward for the rest of the year and getting out of this?
Oh, that's a good one. I think it depends on how well we all work together to still keep social distancing and making sure we're not continuing to spread the virus. As far as economically, today another unemployment number came out. There is a lot of disruption to employment. So I think it will have an impact overall to how the market moves. But from an interest rate standpoint, we're expecting to be in a low rate environment for an extended period. There's a lot of reasons why that would be. Typically in a downturning economy, we have lower rates. That's one of the tools the Fed uses to try and spur on investment. And there's nothing to indicate that for the next 6 to 12 months, we won't see extremely low rates. So that's my expectation from a rate standpoint. I don't know where the housing market goes, but I know in Colorado, there's a lot of demand. So, you know, maybe an opportunity for someone to get into a home they didn't think they could get into a year ago.
Definitely. Awesome. Well, thank you for talking with me, Brett. I always enjoy talking numbers and lending and staying on top of everything. And I appreciate your insight and your expertise.
Thanks, Liz. Appreciate it. I really appreciate the opportunity.
Yeah, I'll see you soon.
Absolutely.
All right. Bye.
See